Good morning. How are you doing this morning? And for all of my Spanish speaking gang members, buenos dias. Buenos dias. I know I probably said that totally wrong. Hey, man, this morning, I shout out to gang, man. All January, we celebrating 1 year. Let me move to the side. Y'all see all that tile back there on that stand? That's some tile. Them some little strips. Some little strips I was cutting out. Some little strips of tile I was cutting out. I got tile all over my room back here. It's tile everywhere. I still ain't finished with the bathroom. But the reason why I got on here this morning, let me share my screen. Because the Twitty twit. The Twitty twit. Y'all know how I be getting. Y'all, if y'all real gang members, for those who tuning in for the first time, the Tim's Tidbit, I like to say, welcome. Hold on, let me go full screen. If this is your first time tuning in to Tim's Tidbits, I like to say, welcome. If it's not your first time tuning in to Tim's Tidbit, I still want to say, welcome, and give you a nice hearty, well, thank you for always tuning in to Tim's Tidbits. Now that that's out of the way. The Twitty twit. Y'all know, I'm a 51-year-old, petty, grumpy old man. And the Twitty twit had me, I was ready to throw my phone out the window this morning because of the stupidity that was on my timeline. It was so much. When I never understood why people give so much power to an individual. It can be celebrities. Hey, I'm dragging. Am I dragging to y'all? I'm in like mad slow motion right now. Y'all let me put a 1 in the chat if y'all can hear me fine. If y'all hear me just fine. What's up, Rhonda? Let me say what's up to the gang while y'all let me know if y'all can see me just fine. What's up, Rhonda Green? What's up, Will? What's up, Valentine? Buenos dias. See that? Valentine speaks Spanish. Hey, Valentine. We got another Spanish speaker here named Valdez. What's up here to learn and share? What's going on, Tiffany? Speaking of Valdez, buenos dias. For those who don't know, she said buenos. She said, good morning, big spider. Araña grande. Okay, y'all see me just fine. I appreciate that. Okay, but it can be celebrities. It can be influencers. It can be, you know what I'm saying? It can be, what's up, Lumpford? What's going on? I already said everybody else. What my wife talking about? I saw your brother text. What? Y'all hold on for a second. Okay. Yeah, that's fine. That's fine, Lump. That's fine, Lump. What's up, Michelle? What's up, Hines? Hey, I'm sorry about that, y'all. Y'all know family first, man. I saw something that didn't look right on my phone. And my wife was like, I saw your brother text. And I'm like, hold on. But yeah, that's fine, Lump. Michelle, Tucker. Anyway, let's get to it, Tim. The cold hard truth about trading, man. That's what we talk about today. We talking about the cold hard truth about trading. I'm putting it to you like this. Trading is one place, one profession where you can be absolutely, positively wrong and still make money. And you can be positively, absolutely correct and still lose money. That is, I need some sound effects.
The cold hard truth about trading.
That's it, man. I'm telling you, it's the only place where you can be. Well, Tim, what do you mean you can be wrong and make money and right and lose money? When you trading, y'all hold on. Let me get some water. Got some. Been out there messing around with no mask on, got dust all in my throat. But when you trading, it's all about probability. So you can know, or you can, I ain't gonna say no, you can, your analysis can be telling you exactly what price is going to do. And because of your risk tolerance, you can get stopped out of a trade and lose money. And then the market continues to go where your analysis told you it was going to go. And you're sitting on the sideline with tears in your eyes. And then you can be slapped wrong about where the market is going to go. But Jack B quick. Jack jumped over a candlestick. You got in and got out like a thief in the night. And you sitting on the sideline in a Lambo because you YOLO'd. You GameStop got you $1 billion to the moon. It ain't go to the moon, but a lot of people made money off of it. A lot of people lost money. The cold hard truth about trading is that you can be absolutely, positively wrong and make plenty of money. And you can be positively, absolutely right and lose plenty of money. Tim, what you talking about? I opened up my Twitter today, and my timeline was full of grown men going back and forth over another grown man trading. I am not going to name any names because I don't want anybody to say I'm defending anyone. But my twit was full to capacity. Y'all know, anybody who know me, y'all know I get on the internet to laugh. If you friends with me, I probably get on your nerve sending you funny internet clips that I find. And by the way, if I get on your nerve sending you these funny internet clips, just type stop in the DM and I'll stop sending you. You can unsubscribe from my internet clips list. Listen, I won't be offended if you type stop in the DM. I'll just stop adding you to the internet clip list if it get on your nerve. Now, I can't even find no funny clips because my twit is full to capacity with grown men going back and forth about another grown man who is trading live on Al Gore's internet. I'm going to ask y'all to do me a favor. Please do not put that much faith, belief in one individual, myself included, that you will get out here on Al Gore's internet and try to defend them or try to say, see, I told you they were. Please don't give nobody else that much energy. Please don't give nobody else that much energy. Because I keep putting my picture down. Stop putting the picture down, Tim. Because the cold, hard truth about trading is that you can be positively or absolutely wrong and make a whole lot of money. And you can be positively, absolutely right and lose a whole lot of money. Trading is all about probabilities. Trading is all about proper risk management. If your risk management is intact, you can be a losing trader and still make money. Tim, what are you saying? With proper risk management and proper risk to reward, you can be a losing trader, sub 50%, and still make money. I don't want you to just take my word for it. I never want you to take my word for anything. Anything I share about the concepts I trade, anything I share about my analysis, anything I say, I want you to be like the Bereans. I want you to search the scriptures to see if those things are true. We're going to say we going over, we saying we taking 10 trades, over 10 trades with proper risk. Let me go here. Let me go to my chart and pull up my notes so that we can get our criteria together. Whoever seen that show Pimps Up, criteria. That's how he said that. Get our criteria together. Right? 10 trades. Right? Our risk to reward, RR, risk to reward is going to be risking 1, right? You're risking 1 to be rewarded 3, right? We're risking 1 to be rewarded 3. Okay? And we're going over 10 trades, right? Well, we said sub 50%. So sub 50%, 5 and 5 will be 50%. So we're going to say 4 wins, right? And 6, look at that red candle just popped up. Y'all see that red candle dropping right there? The market is open, the market is open, the market is open. If you're going to trade, please trade safe. If you're not going to trade, please take copious amounts of notes. And be safe out here in these trading streets. Look at that candle right there. Y'all see it? Oh, it ain't that big. It just looked big when I was got a gap right there. Let's see if we come back down to that gap and push up toward these highs. There's no imbalance over here. We've inverted this imbalance there. So the way we're trading, let's see If this turns out to be a Judas swing and we go down, or if we come into this imbalance right here and push back up toward these highs, I do see a 15-minute imbalance right there. Since this is a trading channel, I guess I'm talking about a little trading. We have a 15-minute imbalance right there above price. No other imbalance over here to think of. So let's see if this bullishness is true bullishness and we bounce off of this 15. This is the NASDAQ that I'm looking at, the NQ. If we bounce off this and attack them highs, this is 15-minute. Let's go to 60-minute. We just touched you should start higher. We just touched a 60-minute fair value gap. So this could be a Judas swing. Remember when I said on the 15-minute, looking at 15-minute, I said, let's see if this is a Judas swing, right? I said we have relative equal lows down here. On the 60-minute, we just bounced off of a 60-minute bearish fair value gap after taking out the sell side. We took out the sell side, came down into this breaker yesterday, and now we've pushed back up into a 60-minute fair value gap. So looking to see if this turns out to be an immediate rebalance and we go up toward those highs, or if this becomes a Judas swing and we push down. What would let me know that if we invert this fair value gap right here, right, then it's more than likely this will be a Judas swing. If we take out these lows, this is a Judas swing. And then I will be looking to get short and attack these lows down here and these imbalances down here. If this holds up, right, then I will be looking to get long to attack these highs. But the higher time frame, there's no higher. Let's look at the 4-hour. Yes, there's no higher. We have a 4-hour consequent encroachment of a wick. That's the only imbalances that we have. Higher. We got a 4-hour consequent encroachment of a wick. We just bounced off of this hourly fair value gap right here, and it's a 15-minute fair value gap up there. So the highest time frame imbalance that's above price is this 1-hour fair value gap that we're in. There is a 4-hour consequent encroachment of a wick, but there's no higher time frame imbalance above price. So then that you're telling me you're falling out of love for me. So there you go. This is the 60-minute imbalance. This is the consequent. Oh, let me turn my fancy dancing on. That's the consequent encroachment of the wick, and that's the 15-minute imbalance right there. Right? If the bullishness is to continue, right? You want this. Change this to green. Let me just do this. Use my templates. I'm slowly forgetting what I was going to say, so I can't remember what I was about to talk about. If somebody remember what I was about to say, what I was talking about, please remind me, because I done totally forgot everything I was about to say. Oh, my note notes. I see it right there. I got my note notes. See, that's why I pull out my note notes. So if the bullishness is to continue, you want this 15-minute fair value gap to hold. You want this hourly to fold. The hourly is the highest time frame imbalance that's above price right now. There is a 15-minute imbalance up here, but the hourly is the highest time frame imbalance that's up there. The 4-hour consequent encroachment is above that. So if the 4-hour wants to dig into this consequent encroachment, we can wick up to that 15-minute fair value gap. But if the 4-hour cares nothing about this consequent encroachment, or if these highs are not the target, this 60-minute can totally negate that 15-minute because it's a lower time frame. So this is lower probability. right here. This reaching that is lower probability. Reaching it is lower probability because of this hourly right here. So but right now, the this 15-minute, it's doing its job, right? For right now, you know, quick scalp, Jack B number, Jack B quick, right? Oh, this is a good example of what I was saying, right? So let's just say you think the market is going to blast off and take out these highs, right? But the market ends up crashing down and taking out these lows. Just in this little time that we were just talking, let's go to 1 minute candles. This is looking like it wants to break down just based off the 1 minute, right? Looking at these candles right here, right? Let's just say coming into this, you said Jack B number, Jack B quick, right? We came up, we hit this, and we dropped. When we came back to the fair value gap, let's say you bought, right? You bought at the fair value gap. We go into the essence of the day plays out like this right here, right? We came down, hit it, pushed up, and then we died off. That's how we saying the day plays out, right? The day plays out. Now, long position, right? You bought as soon as it touched this fair value gap, right? And let's say your stop loss, you said, okay, I'm gonna go to this fair value gap right there. I'm gonna go, my stop loss gonna be at this fair value gap right here, and I'm gonna take it back up to the open of this down close candle because we formed the swing low right there, and this may be a possible bearish order block, right? So this, I'm going to scale out there. Let's see. I'm going to scale out some here because this is Jack B number, Jack B quick, right? I'm going to scale out some there, right? And I'm going to leave the rest on to see if I take it back to the high. Because when you're scalping, you're just going right back to the internal highs. You're not trying to run forever. You're scaling at key points, right? So thus far, right? Thus far, this is how many points is this? I hate trading view stuff like this right here. I'm gonna do it like this, right? So thus far, right there, that's 19 points, right? That's 19 points that you have taken profit on and put in your pocket. If we never make it back up to that high, right? Never make it back up to that high, right? You got 19 points in your pocket, right? Let's just say, okay, right here, you don't like how that's going. It's struggling. Okay, boom. I'm just going to collapse the rest of the trade right there. Boom. You got at least 19 points in your pocket, plus whatever the other piece of it is. If you only had one contract, right? Because I trade like this all the time. I have one contract and I'll just take it back to a very small target, right? I'll take it back to a very small target. I did that last night. Yesterday afternoon, I bought at a fair value gap because I want to sell from a 15-minute fair value gap. I want to sell down, right? And I was like, okay, if I want to, I looked at the range. I said, okay, that's about 20-something points above price. If I want to sell from there, if it give me a buy signal to go up to there, I'm just going to buy it up to it. And I bought it up to it, got like 19 points out of it, and called it a day. And then it turned around and plummeted from the spot I want to sell. Now, from the spot I want to sell, it would have been an amazing. And I know people going to be like, "Yeah, Tim, you say this, you say that about a da ba da, a doobie da ba da, a doobie doobie da ba da." Why did it go on that screen down there? Right? Because you know what I'm saying. I'm on Al Gore's internet, and I don't want a whole nobody Twitter feed to be just like assaulted with do this so nothing crazy don't jump up on the screen. I don't dox myself. This all dealing with what I'm talking about anyway. Let me come here. Let me do this right here. Connection loss. I don't like to hear that when I'm trying to trade. I ain't even have my Ninja Trade open. I wasn't even set up to trade. Right there. Let me see here. Put it on the NQ. Man, I was so mad yesterday. I took a trade. I thought I was on the NQ and I was on the MNQ. Man, I collapsed the trade. I collapsed the trade. I was so bad. I said, I'm on the MNQ. I thought I was on the NQ because on my PA accounts, I trade the I be trading the macros. I be trading the macros to keep the risk down. Oh, I'm sorry, y'all can't see my screen. Okay, so above price, there was a 15 let me see. Hopefully this don't jump around. Okay, right there. So this 15-minute gap is what I want to sell off of. I want to sell off of this 15-minute gap right here. Right. Oh, this is perfect. This goes right in line. Look at God. This goes right in line with what I was just demonstrating over here with a fake example. Right. But if you see here, this 15-minute fair value gap, I want to sell off of this. Right. Price came down and we took out these lows and created this 15-minute fair value gap. So I was bearish. Right. Let me explain why I was bearish. I was bearish because we had came up, we pushed up all day long, and then we dropped down and we took out this low. And so I want to sell off of this 15-minute fair value gap right there. It's a little one up there, but that's all the way up there past this breaker, right? We have a 15-minute breaker right here. If you don't know how to see a breaker, I'm not going to get into that right now, right? There's a little fair value gap. So I say, okay, I ain't worried about him. That's past the breaker. Okay. I said, I want to sell off of this, right? And here we are. It's in the afternoon, right? It's in the afternoon. I'm like, man, it's getting late. You know what I'm saying? I don't like to trade after 3 o'clock. You know, I'm like, it's getting late. I'm like, man, wait a minute. If I'm trying to sell off of this 15-minute fair value gap, we've taken these lows and I'm anticipating price to go back to the 15-minute fair value gap so I can sell. If it give me a buy signal I like, I'm just going to trade up to that. Right now, buying at this point in time, in my humble opinion, because we're on the moon as far as premium, and we got a bearish market structure shift after running buy side liquidity. So in my humble opinion, buying is positively, absolutely wrong. But as you see right here, right? Entry, target. That means I entered and I hit my target, right? Why did I put my target right there, right? It's a little bit before. If I hover right here, you see the low of that fair value gap. I don't know if you can see it. It says that the low right there is 17,682 even. I put my target at 680 even, 2 points before the fair value gap that I wanted to sell off of. And the reason why I put it 2 points below the low of the fair value gap is because if they wanted to use this as another breakaway gap, like they used the one all the way up here, this one, where is it? Right there. They never went back to it. If I put a target 2 points before that so that I can get filled if they never want to come here. Now, I was absolutely wrong in the sense of price was not going back up to the highs, right? I was wrong for buying. If you're thinking about the bias wise, because the bias was bearish, the order flow was bearish, everything. The only reason why I bought is because you see this candle right here next to it, that's 3 o'clock. I don't like trading after 3 o'clock. I was like, I don't know if it's going to get up there before 3 o'clock so I can sell off of it. So I just bought back up to where I wanted to go. And that's 18 3/4 right there. I thought it was 19, but it's 18 3/4. If I would have noticed that I bought 61.25, I would have put it at 61.25. I probably would put it at 81.20. I probably would have put it at 81.50. So I could have got 19 points. Plus commission. I always put it one tick pass with the commission. But the cold hard truth about trading is that in this case, you can see it right there. In this case, for buying right there at that time, I was wrong. For buying right here at this time, I was wrong because price came way down here. Right? But I made money, put money in my pocket. Right there. And somebody gonna ask me. Right now. I know somebody gonna ask me. And this is why I did what I did right there. Right? We came down here. This is after we took the sell side. Right? Chop, slop, chop, slop, chop, slop. Okay. Broke above the highs right there. Created a fair value gap. Inverted this fair value gap on that side. Right? Pushed up. We chop, slop, chop, slop, slop, chop. Right? Bounced off this fair value gap and created a fair value gap there, breaking above the equal highs. This is 1 minute chart. Inverted that fair value gap. I came in right there. You can see I bought right at the high. I bought right at the high of this fair value gap right here. Right there. I bought right at the high of this fair value gap right there. Why? Because we chop slopped, broke above the equal highs of the chop slop, created a fair value gap, inverted this fair value gap right there. When we inverted that fair value gap right there, That's when I put my order, I put my limit order right there at the high of this fair value gap. Right? Stuck my limit order right there at the high of this fair value gap right there at that 61.25. Right? Once we inverted that, we traded back down, picked me up. Right? As you see, what's that? Took, what's that? 2 points of heat, 2 ticks of heat. Right? Took 2 ticks of heat, and then price rallied and it hit my target. Right? Hit my target right there. And I put it, and then once it hit my target, I was like, God dog it, I should have put it, hey, I just noticed this right here. There's a 1 minute fair value gap there too. If I would have noticed that earlier, I would have put it at the high of this, what's the name right there? I'd have put it at the high of that candle right there. Like 1 tick below the high of that candle, if I would have noticed that before. Because that's a if y'all don't know, this is a quick little lesson. When you get into your trades and you see a wick inside a fair value gap like this right here, right there, if you see a wick, see that fair value gap right over there. I don't know if y'all can see the wick. Let me try to like blow it up some. I don't know if y'all can see the wick. Let me see if I can thicken up the wicks for y'all, because when I look at my screen, it's kind of hard to see. Candlesticks, wicks, fatten up the wicks. Yeah, there you go. Okay, if you see a wick inside a fair value gap like that right there, and you're inside a trade, salivating. You should start salivating, because that's like a good spot of liquidity. That's a good spot of liquidity for the algorithm to go attack right there. That's a good, because it's, you know what I'm saying, when I'm inside trade, when I'm in a trade and it's pushing up towards like an imbalance or something like that, if it's pushing up toward an imbalance, if I'm in a trade, I start salivating when I see that right there. If it's, I'd be like, okay, I'm gonna leave it on until there, at least until there, right? And the reason why I say at least to there, because I've learned that that's good liquidity above swing highs that's inside a bearish fair value gap, and below swing lows that's inside a bullish fair value gap. I've learned that's a good source of liquidity. And if it's far enough away, look at this divergence. This is why price has been crazy. You see the Dow pushing up, the NQ dropping, and the ES is the redhead stepchild in the middle. This is why I've been putting in Discord, price is trash, I'm not doing anything for like the last several days. Y'all, if any, all the gang probably the only ones on here, but y'all know in the Discord I've been saying, hey, I don't like trash. I don't like the price action of going to work in the bathroom. But I found that that's a good source of liquidity when you're in a trade, and if it's far enough to reach my target on the trade, I'll keep it on at least into there, because a lot of times when you hit there, a lot of times those be some reversals, because and now you notice normally I like to trade from the imbalance to the liquidity. That's how I like to take my trades, from internal to external. In this case right here, I'm trading from external back to internal. When you're trading, when you're coming from external liquidity back to internal liquidity, you're trading against the grain, and you have to jack be nimble, jack be quick. You got to get in and get out. So when you're trading against the grain, you're absolutely wrong, but you're still making money, because that's the cold hard truth about trading. Now let's get back to the example real quick. What I was about to say. about the profitable, and then I'm gonna let y'all go. Where's my notes? Hey, where'd my notes go? There it is. Okay. So in our example, we said we had 10 trades. We were less than 50%. Right? So that's 40% right there. 40% trader. Let's say for every trade that we took, right, we were risking $50, because we said we were risking $50, right, to make times 3. We're doing 1 to 3 times 3 to make 150, right? We lost 6 times. So 50 times 6 losses, right? $300, right? We won 4 times. 4 times 150. That's $600. Okay, we won $600. We lost $300. Don't get excited. Be like, oh, I can take 10 trades, lose 3, and make $600. Nuh-uh. You got to think about because you lost money. So the label got to get that. Look here, MC Fly. Conglomerate Records got to get that. They got to recoup. Right? Who know who I got? Who know where I got that from? MC Fly and Conglomerate Records. Ain't no lump. You can't answer if you still on here. Right? Who know where I got that from? So 600 minus 300. Right? So your P&L at the end of the day, at the end of the week, or whatever this is when you took these trades, equals a positive $300. Right? Negative, positive. So, like I was saying, proper risk management and proper risk to reward, right? If you're deviating every trade, if you're going like you're risking 1 for 3 this trade, and then you're risking 1 for 2 this trade, then 1 for 1 this trade, then 1 for 5 this trade, man, your data ain't gonna be able to let you know this is my statistical edge. You got to stick with one thing, right? Yesterday, the trade I took yesterday, the one that I showed y'all right here, right? I risked 5 points, right? I risked 5 points, and I got 18. I'm shooting for at least 1 to 3. 1 to 3. I'm shooting for at least 1 to 3. You know what I'm saying? In this case here, I put my stop just before. I put my target just before the fair value gap where I was going, and that was above my 1 to 3. Right? I need my 1 to 3. If you're going 1 to 1, then 1 to 2, then 1 to 3, then 1. Nah. Have a place where I'm risking 1 and I got to get at least 3. It's okay to get more, but you don't want to be hitting 8-9 trades at 1-to-1, you know what I'm saying? And or hit 3 trades at 1-to-1, because 1-to-1, if you win one, you lose one, you right back where you was at. You know what I'm saying? But if you're going at least 1-to-2, I like 1-to-3. It give you a better, you know what I'm saying? Give you more chance if you spiral, if you just go through a slump. Too late. That's all I got, man. That's all I got. It's 10 o'clock. I'm about to start watching the market for real. Before I go, I will open up the floor and say, does anyone have anything for me? Do you have any questions about anything? And please don't be on Al Gore's internet arguing with people about what another grown man did, man. Don't do it. Don't do it. And it ain't got nothing to do with none of them. I can see if it has something to do with them. If somebody said something about them, if somebody said they did something, or if y'all just arguing about what another man did on his trading live stream. Come on, man. Filling up my timeline with that foolishness. I don't see nothing in the chat. I guess all hearts and minds are clear. Has that been the customary 15 seconds? Man, don't you hate when you drink water and it hit that little hanging ball in the back of your throat? I don't know if it hit the hanging ball or if it hit the back of my throat or if it hit my esophagus or whatever. But it took me out. Oh, let's see what the price doing before we get out of here. Let's see what the price doing before we get out of here. Remember we said we were delivering off of an hourly fair value gap, and this right here may turn out to be a Judas swing. It's starting to look like it might be a little Judasy. This, because we hit that hourly. Remember when I was like, remember when I first came in, I said the 1 minute looked like it's going to break down, right? I said the 1 minute looked like it's going to break down. Because we came in here, rewind the tape if you don't believe me. We came in, we had a shift in market structure coming off of this hourly right there, push back up into that SIBI, and we're pushing down. How did I arrive at that? I walked through it. I said we have no higher time frame imbalance above this 1 hour right here. Right? No higher time frame imbalance above this 1 hour. On this 15 this hourly this 15-minute imbalance there. There's no higher time frame imbalance above the 1 hour, so this could possibly be a Judas swing. This 15-minute will have to push us back up. So we're looking to see now what we're looking to see. We've had a 15-minute closure below consequent encroachment. This is making this weaker and weaker and weaker. This 15-minute is extremely weak right now. It could still very well go up with all this chop slot we've been having. It could very well go up, but that 15-minute closure below that consequent encroachment is weakening this 15-minute right here. It's weakening it. So, but again, play devil's advocate for the other side. I said 1 minute looked like it's breaking down. Let's say it never breaks down. We come down here, hit that, and we blast off to the moon. Right? Let's go back to the 1 minute where we was at. Look at God. Look where I put that line at. Right? I said the 1 minute looked like it's breaking down. Right? This is a huge fair value gap. Y'all remember what I said about huge fair value gaps? I don't like entering on first touch because the fair value gap is big. So we're for argument's sake, we're just gonna use consequent encroachment of this fair value gap right here, right? And with consequent encroachment being that close to this breaker right here, I would realistically use that breaker right there. That's where I would, because consequent encroachment of the fair value, let me make this bigger. Consequent encroachment of that fair value gap right there is very close to the closing price of this breaker. So in this case, I would realistically use that breaker right there, right? But look at God. You see where I put that? You see where I dropped that on that higher time frame? Since it went lined up right there, right at the consequent encroachment, that's what we're using. We're using the consequent encroachment because I dropped that. But I realistically will use the breaker because it's so close right there. Now, we're going to look at short position. Right? We entered right here. Right? We entered right there. We put our stop. Oh my God. We put our stop. There you go. Right? We entered right here on this push up right there. We pushed up. We got picked up there. Whatever. But we're going to go with proper stop placement this time. Right? Put it up there. And then we looking down at price. Let's see if it's anything down here. Nothing down there on the 15-minute. Nothing down there. Okay. All right. So we're looking down at price. And then we say, oh, look. We coming down here. Look. Oh, we have us we got like a bullish breaker over here. We got a bullish order block over there. So I'm going to come down to, we're scapping. I'm going to come down to that. But we're just going to go to the low of this fair value gap right there. Right there, right? You can be absolutely wrong because price is going to go back up. But when you come down here to that low, you say, hey, I'm going to scale something off right there. I got one contract. I'm going to take it off right there. I got whatever. 31 points. 31 points that can be in your pocket. 31 points that can be in your pocket. And see right there where I talk about this chop slop we in? This chop slop that we're in. See how we push back up to the top of that fair value gap right there? This is why for the last few days, I've been saying price is trash and me no likey. And what's causing that? The divergence. Look at the divergence between the three indices. Look at the Dow. For the last, these are hourly candles right here. The divergence has been real. The Dow was dropping. The NQ was consolidating. The ES was consolidating. The Dow is popping. The NQ just chilling. The ES is the red-headed stepchild in the middle. This is what's creating that chop slop throughout the intraday. Look what Trey just said. To monitor some of that, go work on other things. You have to do price action. That's crazy. You see what I'm saying? Chop slop. Chop slap. Chop slap. Let me turn this back off because I hate when this thing be showing up. I don't like to plot stuff on my chart. I don't like that stuff to be on there. Hopefully this y'all found some value in this. Hopefully I did touch on the cold hard truth about trading. If I didn't, or if nothing helped anyone, I will do my best again the next time I get on Al Gore's internet. Chop, slop. Look at that. Pushed up. Came back down. Came back down to the order block. Chopping back up. Right? Because look at here. This is not clean. Let me explain this right here. This right here is not clean price. And when I say clean price action, I mean high probability price action. Because when you are delivering from a higher time frame imbalance, right? In this case, we pushed up. Let's go back. We came down, had a market structure shift, consolidated, soaked up liquidity. Then we pushed back up into an hourly imbalance inside the range. So we took out external liquidity, right? And then we pushed back to internal liquidity. Okay. Let me map this out for those who, just in case of somebody on here that's not gang members. And I don't want to lose anyone because y'all taking y'all time to look at this video. Y'all taking y'all time to look at this video. So I don't want to lose anyone. Okay. Looking at, hey, I thought I put that arrow down there. Y'all remember when I put that arrow on there? I know I had put that arrow over there. Okay, so this price leg right here, right? Looking at that price leg right there. Come here. And that right there. I'll put it over here. External liquidity. I just put buy side liquidity, sell side liquidity. That's external sell side liquidity. Me no like you over there. Okay. External sell side liquidity. Right. On the hourly time frame, one hour. On the hourly time frame, right here. There you go. I marked out the wrong one. See, we pushed through that one there. Push through that one there. Now, on this price leg here, we came down and we took out external sell side liquidity. Then once we took out external sell side liquidity, now once we start reverting back, now we turn our attention to this price leg right here. Right? Once we start dog it arrow. Cheese and rice. Once we start going back up, we turn our attention to this price leg here. So with this price leg here, this right there is internal liquidity in the premium. Internal premium liquidity. What makes it internal premium liquidity, Tim? Because there's an imbalance inside this price leg right here. So we push back to the internal liquidity, right? Now, there's no higher time frame imbalance above price. Right, now we're going to go back down to the 15-minute because we were watching this BISI right here. This is the BISI we were looking at right there. Ain't got to be perfect, Tim. Close enough for government work. Okay. We got this is a 15-minute BISI, and we got a 15-minute closure below consequent encroachment right there. If you notice, this first candle that dropped, it came right to consequent encroachment, rejected up and closed inside the fair value gap. This next candle pushed up, came really close to an immediate rebalance, then came down and closed below the consequent encroachment, right? That closure below consequent encroachment in a symmetrical market, in a high probability market, right? That closure below denotes I'm going to these relative equal lows down here, because we're disrespecting this. It's exceedingly bullish. If you touch a bullish fair value gap, respect the top 25 to 50% and get up off of it. That ain't what we did here. Right? That ain't what we did here. We end up pushing all the way through it with a 15-minute closure below the 50%. So that's weak. In a symmetrical market, if we didn't have all of this divergence, all this chop slop, that 15-minute closure below that fair value, that consequent encroachment was a precursor to, hey, we're going to attack these. We're going to attack this sell side. Now, what would be super sloppy price action is if we got a 15-minute closure all the way below it and then started pushing back up like this. That's super sloppy. This right here, this is just not favorable, because this is a signature that I want to keep going lower, because the PD rate time frame and the candle closure time frame are the same time frames, and this candle closure is a signature of weakness because it's closing below 50%, the 50% mark. Let's put it in the fourth grade and see exactly where it closed. See, it closed just above the 75% mark. Closed just above the 75% mark. And that's very, very that's uber weak. That is uber weak. Where did it go? All right, man. I'm tired of running my mouth. I'm about to hit it. Came back to a close to a 70% OTE on this price leg right here. Still got a little piece of that hourly right there. See how price treats that. I'm fun to go for real, y'all. My stomach growling. I'm hungry. I appreciate y'all for hanging out with me. Hopefully I shared something that helped somebody. And remember, man, it's more than one way to skin a cat. I know y'all tap in, and feel like I have something to share when it comes to this stock market, but it's always more than one way to skin a cat. Take the things that I share with you, internalize it. That's why I try to give the why behind what I'm doing. I try not to just say, hey, this is what I did, praise me. I try to give the why, try to give the thought process behind what I'm doing. Hopefully I make that clear. Hopefully, it helps. Internalize the things that I share. Go back and I just had a thought. When I said internalize. Tonight at 7 o'clock, I'm gonna do another live stream, and it's gonna be about how to effectively backtest. Like, when I say, hey, be like the go search the scriptures. Be like the Bereans. Be like the Bereans. Go search the scriptures and see if those things are so. So tonight at 7 o'clock, I'm gonna take you through my thought process when I'm back testing, right? And for me, the only thing back testing is for me is like when I used to back test, I get into all of that. I get into all that later. How to effectively, and it's not so much about actually doing it. There's a teaser. It's not so much about going in and taking the trades back in a replay simulator. That's not effective back testing for me. It's not that. Like, Ninja Trader let you go back to a certain day, and then you can go through and you can take trades on that day as if you was actually trading that day. That's not effective back testing. I'm gonna break down my my thoughts on effective back testing, and we're gonna do that tonight at 7, if I don't forget. Somebody in the Discord remind me. Somebody in the Discord post something in the Discord, remind me at 6 o'clock. No, 6:30. Somebody post something in the Discord at 6:30 to remind me. And if it's anybody on here that got my number, send me a text at 6:30 and be like, Tim, don't forget you said you was gonna do a live stream at 7. I appreciate y'all. Hey man, until the next time I get on Al Gore's internet and share my thoughts, it's your boy Aranya Grande, aka Big Spider. Y'all be safe out here in these trade streets, man. Oh, before we go, remember, we leaving doubt, fear, being undisciplined, having no game plan. We leaving all that in 2023. Then we making a leap to financial freedom in 2024. Y'all be safe out here in these trade streets, man. Gone.